Hey guys, welcome to my trade recap, just going over some of the trades that I took and some of the trades that I'm in. I've been a 5-year trader. I've been trading the markets for, more than 5 years and have some experience. I wouldn't say I'm like a super professional, but I've gained some consistent risk management rules and just like to share that with people, as well as some trading strategies, leaving myself open to some feedback, looking at ways to improve, and just putting myself out there as a trader who is just transparent and open with their results. And just keep you in the loop with my trading journey as we go along. So one of the things that I'm doing right now is an instant fund challenge. Not even, it is sort of a challenge, but I got instantly funded. So I'm going with the 5%ers. I'm using them. What I like about them is that they offer, an instant funded account. So what that means is I don't have to go through the hoops or the challenges, the verifications or demos or anything like that. I just get funded right away. I pay a small fee. It's a one-time fee, and then I just get funded with this account. And as long as I'm within the rules, which I practice, which takes some time to get into, especially if you're new at trading and it's your first time getting into the markets, then risk management might be something you need to work on, right? If you're someone who likes to go in like me, who went in with that $500 account and put on $50 to say $100 per trade, that's like poor risk management. But I didn't know any better. A lot of traders, they don't know any better, and they go in with that. And even a lot of the best traders, that's how they went in as well, and that's how they learned in the markets. Not saying that that's something you should do, that you should blow up your account in order to learn risk management. If you can, and you are willing to listen and follow what people are saying, then practice good risk management skills. That's the biggest thing I would say if you want to go with a funded account or just trade with other people's money. Honestly, in general, just trade with any money in general, whether it's your own, someone else's, doesn't matter. Risk management is super important. Getting the right strategy and trading the right strategy is totally, I would say it's kind of easy. It's not so hard. You can find that. But what is hard to teach and implement is risk management, because you're the one who has to do it at the end of the day. No one can kind of do it for you. And yes, there's resources, but it's up to you to practice that. So anyways, that's what a lot of these prop firms focus on. It's big risk management. The thing that kind of got me attracted with the Fivers is their scaling plan. Once you hit 6%, you get 4 times more capital. So I went with a $10,000 account, and if I hit that 6% within 6 months, which I think is a pretty realistic and fair time period, I get 40,000, which is nice, which is a big boost in terms of payouts. Now the payout split is a little bit lower. It's around 50%. That's the thing you're gonna get. That's you can call it a drawback if you want with the instant funded accounts. You have to you kind of get a lower profit split. Whereas in the future, I might be looking at using those funds and then going for a more for the demo version, or not demo, but look at the challenge method and get a little bit more of a payout split. Or I might even branch out and look at going through brokers and just leveraging them and using some of the sort of benefits that they have. So anyways, that's kind of in the future. Again, what I liked about these guys, their profit targets pretty good for the first round, and then after that it's around 10%, which is not bad. I mean, 10% is pretty average. It's sort of industry standard from what I've looked at. In terms of the stop out, it's a single max stop out, which is 6%. There's no daily stop limits or daily loss limits, which I like the overall one. And it's kind of how it works is if your account goes up, it doesn't float with you like that stop area. It just stays set. So if your stop was at 600 below, say 10,000, so for example, for this, my stop out would be 9,400. So it's 94 flat, even if my account goes up to if I get until I reach the next level. So I should be clear on that, until I reach the next level. So once I reach 40,000, then the stop out increases to whatever 6% of that. So anyways, that's that. What I paid for it was around €385, which I thought was fairly all right. It is a little bit on the pricier side, but if you can afford it, if it makes sense to you, and then you think you can pass this and scale up your account, then you get that paid back almost right away as soon as you pass, and as soon as you make it on to the next level. So anyways, I'm using 5%ers. Another thing I liked about them is that their spreads are super tight. As you can see, I'm on MetaTrader 5. I've logged in through the web trader. They use MetaTrader 5 or MetaTrader 4. I think they prefer MetaTrader 5 and start moving on to MT5 just because they offer more, it's a little more efficient. I actually use this on my phone. I look at Tradingview. So I use Tradingview to do my analysis, and then I place my trades on my phone app, just because I'm kind of on the go. I'm always in and out. I do my work in the morning, do my analysis, set my levels, my targets, know where I'm getting in and out of on trades, and then I place them on my phone. I just find it easier for me. So yeah. Anyways, these are the pairs that you can trade. There are a lot more than that, but I've just added these because it's just time consuming. The one thing that's kind of a drawback is yeah. Anyways, that's something for another video. I'll show. But yeah. So just going. So as you can see, the spreads are really tight. I like this as well because the spreads are very tight. I don't have to worry about my jam or peanut butter, which spread to put on my toast. I just get I actually haven't had jam or peanut butter in a while. It's been some time. I'm out in Korea right now, by the way, and they don't really do jam or peanut butter too much. They do toast, but a different kind of toast. Anyways, if you're interested about that, let me know. Let me know how Korea like, or ask me how Korea is like if you care. If not, if it's mostly trading, which is why you're here, then let's dive deep into it. Let's get into it. So I want to show you the trades that I have open right now. And what I'm using is Tradingview. I use the dark version just because it's easier on the eyes. If you want to switch it, you just go to dark mode and boom, there you go, there's a switch. So what I start with usually is the daily, how I get into my trades, and I look at the trend. So I look at what's been trending. Now this one here, this is one trade I'm in, New Zealand Swiss. You can see it's a bit choppy. We had a really deep pullback, but we're starting to make our way up. We had this sort of, we had this dip, and then it shot up and it made a really nice strong move, and I saw that and I thought, okay, well, let's see the pullback. Let's see how this pullback is coming in. The target is right around this area, so you can see, because we had that move down. I look at the weekly and I look at the daily and I set some key levels. So on the weekly, we have a big move, this big swing. You can see this like major price level being made. I make bands. I use bands because lines are a bit too tight. And a lot of times, because everyone's trading on different brokers, they show different quotes, slightly different quotes. So because that, traders will get in at different prices, and you may see like you see this wave coming in and coming down, then you want to sell the pullback, right? So when it comes up, and that was say that was the support now resistance, and you want to trade, you want to like put your order right at that line. You put your line right there. And then sometimes what happens is it goes over a bit and then it comes down, or it just comes right under, flows right underneath, and then it goes down. How many times have you seen that? I've seen that so many times. And, I got frustrated the hell out of me. I'm sure it frustrated you. It led you down a path of just, tight analyzation, maybe down a path of like using different indicators and all that kind of fun stuff. And yeah, I learned later on that a lot of brokers or traders, their prices are seeing different. So I just started using bands now. I don't look for exact prices, maybe at round numbers. I look for, okay, what's going on? If it's a pulling back at a key price level and that price level is kind of like a round number, maybe some importance there. Another thing is I don't use indicators. I use price action, and I'll explain it why as we go along. Why price action to me is more the best indicator for me. That is, I know some people have been successful with indicators using other tools, Fibonacci's and all that kind of stuff. And that's great. If it works for you, then totally awesome. And the one thing about trading is there's so many ways to make money. There's no one set holy grail. So that's one thing when you're getting into it, is don't assume that there's just one method. There's just this one holy grail, golden circle, golden line age, and like there's a special drink you have to do, and you have to do a drink, right? So I've been out of the loop of this stuff for so long. I don't even know like what's popular, because there's so many different ways of making money in the markets. If you read the books and listen to all these traders, they have some things in common, but the way they make money are almost all very different. They have very different methods of making money. So anyways, Yeah, so this is one trade I'm in. What I'm looking for is I'm a trend trader, so I look for the trend, and as you can see, where I've got in was on this 4 hours. So I looked for the pullback and I wanted to see a bit of a hold. So we saw this sort of trend, this sort of movement coming down. If we go down to the 1 hour, you know, it's a big move down, but then on the next try, not so much. We're starting to see a bit of a range that piqued my interest. And we're like, okay, well, let's see the pull. Let's see this break. Let's see if it breaks up or if it breaks down. Because a lot of times you may see ranges and it may just break down even further. It may just be like a continuation sort of flag or not. So for me, I saw, okay, well, let's see how it's going on. Because last time, that's another thing too. You got to look at memory. Memory plays a key role as well, as I've learned. This isn't my idea, of course. None of these are my ideas. They're all not super original. They've been recycled, but that's a great thing about trading. You don't need to reinvent the wheel. You can just go in with like an original idea and trade with that. If I talk too much, press the like button. If I talk too much, then just leave a comment below. I'm veering off. So anyways, yeah, so what I looked at, okay, it was the reaction here. So what's the reaction at this level? Are we going to see sort of the same reaction? Are these guys going to push forward, or are these same traders going to come back and be like, hey, remember when this price went up? Remember when, you know, like Gerald came in with his big ass orders and started moving the market up? Let's see if Gerald's going to come in again. Did Gerald show up? I mean, maybe. It looks like he sort of did. So I was guessing that. I'm like, okay, where's Gerald? Is he gonna show up again? Looks like he may be showing up. Is he gonna bring his gang over? Is he gonna bring his other cronies? People still say cronies. Anyways, so I thought, okay, well, let's try this out. I see this push up, and we're seeing some big orders being piled up here. As you can see, volume as well. I don't look at volume too much as much as I should be sometimes, but in this case, volume happened to pick up, and I thought, okay, well, this is either gonna go to the upside or it's going to break down lower. This could be volume coming in. And as well, I think another reason that kind of made me sort of, okay, well, I went in anyways, but I had the anticipation we could be breaking down just because we had this level as well. This could be a possible price level where traders may come in. And as you can see, we managed to push up. So I got in around here with a stop loss just beyond that support or that price level. That's the other thing too. I like to place my stop losses just beyond, more than beyond the recent level, the recent sort of swing that we have. And that's basically all these are. These are just swings, and we're trying to look for buying into the swings. You can even call this swing trading. This is a type of swing trading. In fact, this is basically swing trading, what you're looking at. They gave all these different names, you know, pullback trading, swing trading. I think they're all kind of sort of the same thing. You know, I don't know their terms too well, but I do know what I do know, and what I do work on is just the price action. Looking at what traders are doing, that's more important to me than like putting a name to what the hell I'm doing. So anyways, so my anticipated target is right around this level here, around the 601. Looking to take probably 50% off and see if we can push forward. Move my stop loss to break even, maybe even trail the stop a bit. What I'm looking at is if we're able to break this, we may get tested. We may have a test right around this area here. So that's what I'm looking at with New Zealand Swiss. That's one trade that I have open. Another trade here is New Zealand yen, going into the yens. This one is a little bit not so trend following. This is more of a sort of reversal setup, looking to see if we get the same reaction as last time with these guys. We can see you can make the argument on both sides. We can see that, okay, potentially we could be reversing depending on how the traders react at this key price level. And it looks like right now they seem to be reacting fairly decently, but this could also be an argument for, okay, we'll see this big move up, this recent push up, and how we're pulling back is really shallow, kind of shallow. So if we look at this from the buy side, we see this big move up. You can see here. Another thing is you want to look at the sort of way we pull back. So right here, this looked like, okay, looking back at it, of course, it's easy to tell. But when you see this, you want to look for that initial move up, and then what's the angle of that pullback? How are we pulling back? Is it just as steep, or is it just as like, yeah, is it just as steep, or is it a little more shallow? As you can see, the angle of this is like almost straight, like 90 degree. But as we've come down, it's almost around, it's a little bit more acute, angled. I don't know. I didn't do so good in math, by the way. anyone who wants to know. I don't know, this is like 90 degrees. This is probably like 80 or something like that. It's so 80. But you can tell that it's a little bit shallower. Now, this tells me that, okay, well, looks like the strength of these sellers is not as much. And if we go to the lower time frame, we can start to see a bit of some waves here. But we can see, okay, well, perhaps looks like these buyers may be in control. When are they going to show up? And it looks like they did right there. So they showed up pretty strong. And now what we're doing is we're sort of pulling back. But we want to see the next wave of these buyers coming in. Are these buyers going to come with the same strength as last time? They could be. They are right now. So I put in a trade just to sort of test that theory to see, okay, well, are we going to be reversing? Because we had this initial move down, and now the way we're coming back is sort of gradual. We had this move. You can see the angle of that. And then what's the angle of this? This is more gradual, right? In fact, I'm going to draw a line just to give a better idea. Better representation of what's going on. Also helps me out too. So there's that line. So that's a pretty steep line, but how are we pulling back? As you can see, a lot more gradual, right? This is not, it's taking more time. It's taking more time to fill up that space, to fill up that initial, to get back to that previous price level, to say, right? Relative to how fast we came down. So this to me gives me more odds, more probability that we could be going down. This could be the final push. This could be that exhausting push from those buyers. Maybe Gerald isn't in on this one. Maybe Gerald is out to lunch. He's focused on the Swiss. Perhaps he's not here. So yeah. Or maybe someone else is going to come in. Maybe Darlene's going to come in with their trades and be like, okay, yeah, well, I don't think this should be up here. I think it should be down lower. Okay, because I like Prada. I like Gucci. Boom. There we go. I don't know any Prada Gucci wearing person named Darlene. Do you? If you do, let me know. Let me know if you met anyone named Darlene. And another thing is that I've drawn this sort of price level. We can see that this is sort of a price level that we're reaching here, and it seems like traders are somewhat reacting. Even if you go even deeper, right? I used to get like super deep. This is another trap as well that traders get into when they don't see much action on the larger time frames. They start going in shorter and shorter and shorter, and the next thing you know, they're in like the 5-minute time frame. I fell into this trap. In fact, you know what? I think that's what led me to a little bit of a drawdown period was, just not seeing as much action on the daily or the 4-hour, and that need to like, okay, I got to make money quicker. So because of that, I went into the shorter time frames and found out, okay, well, that's like I did see the trades, but I needed to react a lot faster because obviously it's a big difference when you're going from the 4-hour to the 5-minute. The same patterns occur. You just see them a lot more frequently, and it's a little bit of a different game. You can sort of apply the same strategies, but you just got to react quicker. And for me, it just wasn't the case. I got into the trap of information overload, really analyzing things a little too much, and especially with so many currencies, I started putting that in and it just didn't work. So that's what led me to just backtrack and look at the larger time frame, focus more on price action, what traders are doing on the larger time frame. It gives me more time to react and respond to what's going on. So as we can see here, we see a bit of a range on the 15 minutes. So this range, when you see ranges, it means that there's an accumulation of orders. There's some orders coming in or orders going out. It depends, but something's going on. Some sort of accumulation is going on. Something's happening. It just means that to me that something is brewing. So it could be anything. It could be prices, traders will come in and boom, take the price up, or boom, take the price down. We'll see. Let's see what happens. So I put a trade on this to see what traders would do. My guess or my anticipation is that we'll see prices go down. May take some time, may not happen right away. That's the other thing too. When you're going to longer time frames, you have to wait maybe a day, maybe a day or two for the price to really play out in your favor. My stop loss is right above this area, this sort of resistance area here, this major price level. If we do break up, then kind of want to see the strength of that up move. I set an alert just to notify myself if prices do move up here. Okay, next one we got pound Swiss. This one I like. This one is a little bit more easier to read. Again, this is a trend. This has been moving up for the past few days. It's a nice trend. I use this trend line, drew this trend line as like a bit of a gauge. That's what trend lines should be used for. Like you can't, I wouldn't say rely on trend lines wholeheartedly and just like religiously. Like if it hits that trend line, boom, I'm buying, or boom, I'm selling. That's it. Put the house in, tell Lizzie to quit school or quit work or something like that. If you name your children Lizzie, let me know. I'm curious. Let me know. Where'd that come from? Lizzie McGuire. I used to watch Lizzie McGuire. Anyways, so what did we see? So what I like to do as well is to draw little boxes to show, okay, well, how did the price action look at these turns? Not just, okay, well, let's just buy there, but what was the action? What was sort of like the story behind that move before it went up, right? Before I did that. How did it look, right? So what I saw was, all right, well, let's go down to the 4 hour and see. So I got in. So first, let's talk about the trade that I got in. So I saw this pullback. This pullback was coming near this trend line. Thought, okay, well, let's see the price action around this trend line, right? Don't just blindly buy into this. If it hits the line, okay, boom, we buy, we put everything in. Want to see how we're going down, okay? So we had a big move here. Okay, great, that's a touch. Okay, and then as we're coming up, it didn't look very strong for the buyers yet. So I wanted to see, okay, what's the next wave? Because that's a pretty strong move down. What's the next wave down? As you can see, not too much. Again, a little bit of a push, but then that wave came. Okay, so we made a new low. That's where I kind of like stepped off and be like, okay, well, let's wait and see. But the thing is, how we pull back, this is interesting too. So you want to see how we pull back. So as you can see, obviously, yes, the move is a little bit more shallow in terms of angle. So we had a steep angle down in a short amount of time, and then a slightly longer time to sort of make up that move. But there are some exceptions, and this is where sort of gauging and getting an eye, it takes a lot of practice, a lot of experience, and just looking at prices, and as well as just not putting a hard sort of fixed type assumption that, okay, well, if this happens, this has to happen. You got to be open, you got to be flexible to things changing, being like, okay, well, if this happens, it's a probability, it's a chance that this could happen. That's where, again, risk management comes into play. And as long as you're not risking too much, then you can afford to be wrong a few more times, because let's face it, you're going to be wrong in trading so many times. And I think that's one thing I got good at, was being okay with being wrong. It's like, okay, it's all right to be wrong. It's going to happen. And that kind of like bled through into life. And, society tells you, oh, it's not okay to be wrong. You have to be right, and blah, 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 and all that bullshit. But it's okay to be wrong as long as you learn from it and you're able to apply what you learned into the next time. And that's the thing with trading. It gives you so many chances, so many opportunities to apply what you sort of did wrong or what mistake you made the last trade, right? So this tells me, okay, well, this came back quickly, meaning that, all right, well, these buyers, maybe this is a better price for these buyers to come in. Let's see how these sellers come back, right? So they came back a bit gradual. That was a struggle. That was a bit of a struggle. And again, it's sort of along this, it broke the trend line, sure, but it didn't close below the trend line on a longer time frame. It sort of came right back into this, not only trend line, but into this range, into this sort of price level. So that's a few confirmations there that, okay, well, these buyers, it seems like this isn't seller's market just yet. So we're starting to hold. And I thought, okay, let's put a trade in, especially now that we pushed up. And then the way we're coming down, look at that gradual move. If I can just get that out of the way for a second. So look at that gradual move. Look at all these candles. Again, so looking back at that pullback, the angle up, and then the angle up, and then the shortest shadow angle down. Kind of thought of Ace Ventura when I did that just now. But yes, look at these candles. Look at the amount of candles it takes to sort of fill up that space. A lot more than this. So this tells me, okay, I think we have a trade setup. We have a potential trade setup. The risk, I can risk enough. I put my stop loss right below there just because that's a big swing in the way we're coming back. We seem to be holding into this area, right? So that's where I put my trade in. Stop loss right beyond this swing low. And as of right now, it took some time. I'm not gonna lie, I did get a little bit nervous when I saw this pullback here. But I thought, okay, well, we haven't breached this yet, It's another thing too. That was I would get out of trades too soon before the trade would actually work out and go in the favor. And like, I mean, obviously everyone wants it to go boom, but sometimes it just takes this, goes a little bit this, goes a little bit that, goes down a little bit, and then boom. and so yeah. So I was like, okay, well let's hold off, let's wait, because you know the amount I'm risking is I'm comfortable with that risk anyways. That's almost like a tuition fee. It's almost like you're not going to see that money again. You have to accept the fact that you could lose that money. Some traders, I know Paul Tudor Jones says that, okay, he goes into every trade assuming that he's wrong. You know, that works. That works in some ways, because it says that, okay, well, I'm now, some people being like, well, that's kind of negative. Why are you going with that negative sort of attitude, man? Man, you can't go with that, man. You go with the positive vibe, dude, bro. But the way he looks at being wrong is different than what people think. It's what your definition of that word is. To him, wrong just means, you know, this trade didn't work out. This trade didn't work out according to, you know, the probability or the strategy that I have. But that doesn't necessarily make me a bad person or a worse person or anything like that. That doesn't affect me, because trading is just random. You don't know the traders on the other side of these trades. I don't know if this trade's going to move up or down, because there may be some other trader who just doesn't think price should be at this level, who thinks price should be lower. That's just, and I don't know that. How am I going to know that? I don't. So I got to put these trades on with no expectation of being right or wrong in any way. It's just a bet. It's just a sample. It's just an educated bet. And I say edge with EDGEDUCATED. If I spell that wrong, let me know. But educated. I know I spelled the first part wrong, but that's on purpose. Edge, because you use your edge, right? You use your edge to get in the markets, but it's still a guess at the end of the day, because you don't know who the players are on the other side of the trade. You don't know what their intentions are, even how their day's going. Maybe they're having a shitty day and they end up coming to markets. Well, I want to put this down because, you know, Martha won't let me have put peanut butter spread on my toast today. So, you know, screw her kind of thing. Some traders are like that. They could be like that. You know, they're not perfect beings as we put them out to be. They go through the same mental challenges that we all do. They just find different ways, and sometimes more effective ways for them to cope with it. So anyways, so as we're seeing, we see a big push up. Eventually this held. I think some news came out yesterday to push the price up. Now we're seeing some hold here. But so I took off part of this position. I still have this position on just because my anticipated move is beyond. We're in this uptrend and we haven't broken this trend yet. So I'm anticipating that traders will push the price up, maybe around this area here. So I'm waiting for that. One of the things I'm looking for is this reaction here. So what kind of reaction are we seeing? So far, you know, not too bad of a reaction, and we're seeing some sort of hold. You could argue that we're seeing some higher lows being made. You know, there's no lower lows yet. So we have some opportunity for room to move forward. Perhaps if we have price pull back a little bit deeper, I might add on to this position, depending on how we pull back. If it's a very shallow type pullback where price is gingerly moving along, we could even see price come back potentially to this level here, right? To this price level. Since we broke above, that was the recent sort of resistance. We could see traders come back to around this area and move price up. And is it near a round number? Yeah, 1.4. So that could be a move. That could be a point. That could be a place for other big traders to come in and make their move, add on to their positions, right? Okay, pound CAD. What do we have here? So right now, what we're seeing is a bit of a shallow pullback. You know, we have a big move up, and again, same thing. We have this big, strong angle up, and then we're seeing a very shallow, takes its time sort of pullback. We are in a quiet session, so let's see what happens in London, what these London traders think. Right now, we're still in the Tokyo session, the Asian session. But so yeah, let's wait and see what happens. On the daily though, what we're looking at, why I got into this was we have a nice move up. As we can see, we had a very nice shallow pullback. That was the same thing that I saw when we were coming into this trade. So a very shallow pullback. I had to wait a few days on this actually, funny enough. And that's the other thing too. That's the one thing that a lot of traders kind of make the mistake of. they anticipate, they sort of wait. They're like, oh, I've been waiting for this move for like days, for like weeks, and it just does this. That's it. We did this before. It did this thing before. Now it's doing this. That's nothing. Okay, screw you. You piss me off. You make me mad. I don't want to. I want my spread. I paid too much spread. I gave too much peanut butter jam spread on this toast. I want it back. That's it. And they cut the trade. They'll probably cut the trade. I made this mistake. I actually did this because I'm like, okay, well, I put this work and I waited for so long. The market owes me this move. The market owes me that move up, right? That's sort of, it sounds ridiculous when you're saying out loud that the market owes me this, but that's kind of what we're going at mentally with that sort of mindset, with that saying that like, oh, the market owes me this kind of money, owes me this move. The market doesn't owe you anything. It doesn't. I learned that. It took me some time to learn that. Oh man, the sun's really coming in now. It took me some time to learn that. I'm just going to shift this over so it doesn't look, so it's easier on your eyes, as well as mine. Anyways, yeah. So we got to get out of that sort of mindset and sort of thing that people owe us. And it makes sense because it comes back to, okay, well, we spent this amount of time. We should be owed for our time because we came from a society where we get paid for the amount of time we put in. We don't get paid for the quality of the work, which that's one of the reasons why I kind of got out of the office work and the sort of 9 to 5 hourly pay, because I don't care about like, okay, you spend this much time doing it. How's the quality of that work? Is it a good quality amount of work? But anyways, that's another story. But yeah, that's what we look at. We anticipate that, okay, well, this move could still go because look, we're still seeing a gradual pullback. That's what I saw. I saw this gradual pullback and I'm like, okay, well, let's see if this move continues, especially now that we're nearing a key price level, this sort of price level here. Let's see how traders are going to react. And that's another thing with picking strategies. If you're looking for a strategy, look at what's already working in the markets. As you can see here, people are looking at these levels, which could be another term for support and resistance. How many times have you come across support and resistance when you're learning trading, but you sort of ignored it because you're like, oh, this is too easy, too simple. Trading's got to be more complicated than this. It can't be this easy. Otherwise, everybody would be rich. Well, guess what? Everyone is not rich. You still have an 80% failure rate in trading because I think a lot of people fail to just master the basics, including myself. That was me as well. Like, look at Steph Curry. He mastered his dribbling, and dribbling is the most basic thing. He's one of the best dribblers out there, and that's what makes him so good. That's one of the things that makes him an elite player, is because he just masters the basics. So don't take those basics for granted. That's one lesson that I want to point out, especially this, and especially if prices are still moving based on these levels. That means other traders in the world, and I'm talking about big traders, like big player traders, are still using support and resistance. They're still trading based off of support and resistance levels, these key price levels. So why not go with them and do what they're doing and trade that as well? Use that as a base, and of course, and then after a while, of course, like tweak it a little, find different ways to make it your own, and blah blah blah. I think that's another thing too. We like to make things our own rather than use someone else's, because we just want to be like validated and be like, hey, this is my idea. This is all me. I did this right here. I took this. No, Raju didn't do anything. He didn't. This isn't Raju's idea. Screw him. This is mine. This is my idea. Right? We go with that. Now you know my background. Now you know what my background is. But anyways, yes. So this is what I look for. So I like this pullback. This is a very nice pullback. It's very gradual, not as steep. And I look for, okay, well, let's wait and see for A, what traders do at this price level, and then B, how we're pulling back. Are we going to make new lows? And I saw this. I'm like, okay, well, let's see if this trend continues. As we can see on the push down, okay, we're starting to see a bit of a swing, starting to see a bit of a roll. Okay, so is that price going to roll over? It did. And then where did I get in? Did I get in around there? I got in right around this area here, actually. I lied. I should move that up there. That's a lie. Yeah, I got in right around here, right around this area. And it took some time. Yeah, it took a few hours for price to actually push up and play out. But I saw this range. it was a change. It was a bit of a change in momentum. Of course, it could go down. It could have easily gone down. That's the risk you're going to take with these trades, right? That's just the risk you're taking. There's no guarantees. So the way it pushed up, that's great. Okay, that's wonderful. It didn't push up as much as I anticipated. I actually anticipated to move up higher, but that's okay. I was like, okay, well, let's wait and see for the pullback. That's the other thing too. I get out of these trades a little too soon, and then don't even wait for the story to build to be like, okay, well, how are we coming back? As you can see, yes, it's a bit steeper relative to this, but I'm like, okay, well, again, I got tempted to get out of this trade to be like, well, it's coming in steep, it's coming in hard. But I thought, okay, well, let's wait and see what these traders will do, whether these support and resistance traders are going to come in. Okay, they had a bit of a reaction. All right, decent. This is near the end of the day, very late in the day, so maybe not as many traders coming in. This is kind of like later into New York, near the New York close. So, okay, maybe not. Maybe let's see. As we're pulling back, okay, a lot more shallow, a lot more gentle. Now let's see what's going to happen. Let's see if these traders are going to show up. Again, let's see what happens in the London session. Waiting to see. I did manage to take some profits out of here. I took about half profits. So I moved my stop loss to near zero because I know if it pushes down, it could push down lower and then boom, right up. I've seen that a lot of times as well, where the price comes in like just a sore thumb and then it just, quickly comes back in and pushes up. So you could see that as well. A lot of different ways. Anyways, it's a long video, I know, but I thought I'd just share it and give everything, put everything out there, and you cut and paste and jump to different areas. Man, the sun's coming in nicely. Jesus. Anyways, is this better? Is this better? Is this better? Is this better? I don't know. Let's go with this. Just ignore my face for the last one here. Okay, so we got pound US dollar. So this one is looking a little bit choppy. It's coming, yeah, that's coming right here at this support and resistance, this key price level. Good push up, and we're seeing some gradual movement down. I like to see the next wave. Let's see the next wave to see, because we didn't make a higher high, as much of a higher high, but we're not really making lower lows yet. You can even argue that we have a bit of a trend line here going on. In fact, I'll draw that out there just for reference. We have a bit of a trend line. There you go. Okay. This down to make it there. Okay, so we got a bit going on, so we could see maybe some traders react here and maybe push price up, but for now I'm holding on to this one. So what got me into it was this move. Clearly we see a nice uptrend. Great. Okay, we see this pushback here, and I wanted to see, all right, well, let's see if these guys will continue. So I looked for an entry. Man, I know it itches a lot when talking. Okay, so same thing here, right? So same push. We saw a big push here, and then look at this gradual pullback, right? Gradual pullback. Very steady, and then as well on top of that, this is a support and resistance level, right? This is a key level, price level here. Let's see if other traders are going to come in. Let's see if the Geralds are going to come in. Let's see if the Darlenes are going to come in. The Rajus, the Gopals, the Tom Fords. Let's see if those guys are going to come in and push this price up as well, right? So again, nice, very steady pullback. We see a big price move up. How long did it take to sort of cover this space? Quite some time. It took quite some time, and for me, I thought, okay, let's make that risk. Let's take that risk and put a trade in with the stop loss, right beyond this level here, and let's see if price moves up. And so far, it's doing well. It seems to be performing. The way we're pulling back is shallow compared to that move up. Okay, shallow pullbacks, push up. Shallow pullbacks, I would consider this a bit of a shallow pullback. Okay, we can even go down to the 15 and see, okay, how is this looking? Very shallow, very, very, very shallow. And we're starting to see a change in pattern, right? A shift in this pattern. So let's see what happens when London opens. This is another... this is pound, so this is a London-based sort of pound-based pair, right? So, anyways, that's it. Those are the pairs I'm looking at, that I'm holding on to, that I'm getting in. I'll do another video showing what pairs to look for and going into some potential setups in the next few days, maybe onto next week. But if you found this video helpful, if you found it insightful, if you gained some knowledge out of it, this is kind of like a personal diary, sort of like a video diary for me. But I intend to do this every week, every Friday, be posting out these sort of review videos, and then every Monday I'll be looking to post up any outlook type videos, looking at any pairs coming up. And over time we'll get better, not only with making these videos, with the timing, but also the lighting as well. I know I like the sun. But anyways, hope you enjoyed this. Leave a comment below. Check out my article. Look at the Fivers if you're interested in getting your account funded, if you want to go down that way, that route. I find it better just because you save a bit of money. I know you got to put a lot of capital up to trade efficiently, to put up a trading account, especially once you get to know what risk management is and the rules. You can't be trading and risking 10% of your capital in every trade. You're just going to get wiped out unless you have a really high hit ratio and you got a good risk to reward ratio. Those two things, sure, go for it, but even then it's still a high risk. So I like these funded accounts, instant funded accounts. You can leverage a lot of capital for not too much. Another way, if you want to get capital as well, is going through something called fund seeding. You can just do a Google search on fund seeder. Basically, these are people out there looking to invest with traders. All they have to do, these traders, is post their track record. And there are multiple ways to post your track record up. You can just you can do it on a demo account. They'll even look at demo accounts and consider that. They'll look at live accounts. They don't care about how much money you start out trading with. You can go practice with $100 account, and if they're impressed, if they see some usefulness out of that, then they'll be happy to invest $10,000. You might be able to trade with someone else's $10,000 account, work out a nice profit split, and go from there. So that's another thing I'm looking at doing as well. I'm using the track record that I have here and post that onto some site called Fundseeder. I'll let you know how that goes as well. Put a link down below. And yeah, if you get any insight, any value, let me know in the comments. Subscribe, like. If you like this Gurpal sort of face, Gurpal kind of, I don't know. If your name is Gurpal and you're watching this, let me know, and I'll give you a shout out. Anyways, cheers and trade simple.